Good evening, ladies and gentlemen. It is Tuesday, 22nd of June, 2021. Welcome to Hindsight, episode 17, where we learn to be a better trader. We're going to take a look at the trades that I've taken today, as well as the opportunities that were missed and what could have been done better. Now, today we traded 9 tickers, which is massive. There's heaps of opportunities out there today, and I'm going to go through each of them that I've traded today, and I want you to pay attention to what my trading style is, right? There's a couple of people out there that ask me, where do I enter a stock? Now, I can't give you financial advice on that, but what I can say is pay attention to my entries and we'll talk it through at the end of the video. Now, RAG, this one was, embarrassingly enough, was a bit of an accident. I was looking at SUD's chart and it looked like a triple bottom on that chart, and the order book looked really good. 5.1 was massively stacked. I queued up at 5.2, bailed out at 5.3 and 5.4. Traditionally, I never buy a stock that's plummeting, especially when it breaks a major horizontal level. So this was by accident and almost entirely an order book based trade. This was pretty active before 11 o'clock, so I was pretty happy to take that trade regardless, but that's not the norm for me. I don't normally buy something that's on its way down. This one was a happy accident, more or less. And let's actually look at SUD, which was the trade that I took, and this was based on the fact that this was swinging back to the upside, or at the very least was going sideways. Now, I did break to 5.3, I bought at 5.2 and was targeting 5.7, 5.8, but didn't get there. Saw lots of reloads at 5.5, so I ended up basing my execution, my trade, the vast majority selling out at 5.5. I think I ended up taking maybe 5% of my holdings, or 10% or something like that, something very small, and selling it at 5.3. Now, I was queued up at 5.2, but ended up pulling it because this went sideways for way too long. Ultimately, the volumes didn't come in. It didn't like flash dip below and rally like I was expecting. So I just left that one alone. But do note, this was starting to swing back to the upside. A new high was made. Volumes came in. That's the most important thing. You'll typically notice when I enter a stock, it's because volumes have come into play. Without volumes, I would never have touched this trade. FME. This one, horizontal, again, volumes came in. Rising volumes. Let's have a look at this from the perspective of when I bought, right? High volumes came in, or rather rising volumes came in, and even though it's at the highs, volumes kind of what dictate what happened at these levels. I know a lot of people would look at this area and go, yeah, but I don't want to buy the high. People want to wait for the dip, buy here, buy here, buy here. I personally think that's the incorrect way of trading, because how do you know if you buy the dip, let's say here, that it's not going to keep going down to here and retest the lows? And what do? Where's your stop loss? Do you sell out here? Like there's nothing that's immediately evident as to what to do. So a lot of people actually end up scaling in, and then when the pain's too much, they hit out, and then the stock kind of bounces in this kind of range. So, I personally think that's the wrong way to trade. And I know so many people do it because there's this horseshit mantra of buy low, sell high. If you look at all my trades today, I never buy the lows, and I rarely sell the highs, right? I ride the momentum between the lows and the highs, given some level of confirmation. So do keep that in mind when you're trading and making up your mind as to when to enter a stock. So that's FME in a nutshell. This one, there was a wall at 25 cents. So I sold in front of that wall thinking that it wouldn't push past 24.5. Ended up, I think, line wiping all the way to 25.5. So an extra couple of tick opportunity, but I was happy, breakout, okay volumes, and just took what was given to me. That was about 3 ticks on that trade, and I was pretty happy with that. Now, IGO, this one was gapping up like a good 10% on a large cap stock. I think it was. I actually don't know what the market cap is, but it's a $7 stock. I assume it's in the billions. Didn't read the news. Don't care what the news is. All I care about was this was gapping up. I saw it hit about $8, $8.03, and then dropped to like $7.98, $7.97. And then within about 20 to 30 seconds before it could open at the earliest time, it dropped 20 pips, 25 ticks, right? Massive shift right into the opening price. Now that to me indicates a sell, right? This is gapped up too hard, too fast. It's going to be a short on match. The exact same thing happened on Crown when it was gapping down. In the final seconds leading up to the open, massive orders came in and vastly changed the indicative price. When that happens, that's the indication for me. That is the indication to go the other way. Even though it's gapping down, go long. In this case, when it gaps up, go short. Because the amount of sell pressure that just showed up indicates that one of two things happened. One, a big bidder pulled out, or two, a big seller stepped up. One of those two things must have been true for it to go from $8 to $7.75 in the space of a couple of seconds. So for me, that's indicative of going short or going that particular direction, following the direction of the volumes right before open. So this doesn't happen very often. And when it does, to me, that's a clear signal to go in that direction, that the volumes are going seconds before open or seconds before match. So that one's pretty straightforward. It took a short that failed. Nice little uptrend, uptrend, uptrend. It broke. I got a bit late. Broke VWAP, went short 753, or was it 754? Ended up roughly break even. Might have taken a one tick loss on this one, but this looks about right. 753, 753. ZipPay, $8 major level. So bounced on 8, retested VWAP. Significant that it stays below it. Comes back down. Took a terrible short. Arguably took a terrible short at around 806, 807. Sorry, 804. 804, my apologies. It bounced. And it failed. I was looking at adding on. Potentially the correct thing for me would have been to add on here at this horizontal, anywhere below the retest of $8. But it failed. Volumes didn't come in, didn't push it lower. And there was a major sort of level that I had drawn in here. So I thought I'd just, respect it. It seems to be respected. So it started taking a swing to the upside. Took a few ticks there. Nothing of significance. No big dollar dues there. But still a profitable trade. CHN, if I zoom out on, say, the 5-minute chart, this will be a little more evident, was this level of resistance. It wasn't as significant, like, that's only 2 data points. You've got other trend lines here that are more significant, so it is what it is. If I zoom into the 1-minute chart, you can see the trade that I've taken. It looked like a rejection initially off the major trend line, or what I thought might have been a major trend line. It was a little bit of a trend line. It shorted it at 695, saw it roll over and it looked really good, especially when it went below VWAP. And then that should have been my indication that this was pretty much over, but I didn't take it. I didn't close out. I didn't pay attention to the fact that it recovered from VWAP and then just started swinging back up. Instead, I mistakenly added short here and ended up getting stopped out because it kind of just pumped through that $7 level pretty quickly. And of course, there was like little horizontals here as well. So this one, in hindsight, should have paid attention to this VWAP. I didn't. I mistakenly forgotten to take a look at VWAP on this one and just traded what I thought was there and ended up resulting in a loss. And that's what it is. It is what it is. In hindsight, always check VWAP, but, mistakes are made. IDT, this one, terrible amateur mistake. I saw this one, I opened it up, and I caught it as it was on this trajectory back to the upside in maybe the candle before this one, or maybe 2. And I saw the 40 going, I joined the momentum. Terrible. Just terrible decision making there. That was FOMO ultimately. And FOMO still affects people like me. All right, I see it, I want it. It was a terrible decision. It is what it is. I tried to balance it out by entering at 395 as well. And then 385 as well. So I evened it out. I tried evening it out, balancing it out, because it was ranging and I was happy to hold that position until something happened. This really was just going sideways for way too long. There was 3 o'clock news and it just wouldn't break out of this range. So I scaled out at 39 and 39 as well. So this ended up being a loss on average, maybe by half a tick or a tick or something like that. But it was a nice pump consolidate. It just didn't follow through. Volumes didn't come in, and it is what it is. There was good volumes here, looking for the breakout for the 40. I thought I'd join the momentum, and then reloads came in, and that looked terrible. When you've got high volumes attempting to break out of a horizontal range, and reloads come in, and big reloads, you just kind of just look at your screen and just go, fuck. It's frustrating, right? Especially when there's no room to hit out for break even, right? I'm buying at 40. So what do? I buy at 39.5 in anticipation that more volume will come. It didn't come. It ended up selling off a pretty reasonable sized candle on similar volumes, and that should have been like my decision to get out instead of adding on at 38.5. That probably was a terrible idea, but in hindsight, it still was within range, and ultimately I did decide to cut my losses. I wasn't going to wait for another attempt of a breakout, so scaled out here and here, and just took what I could. I knew this wasn't going to break out of the 40. There's no way after the reloads here at 40. I was just trying to get what I could. AAU, this was really nice. There was a horizontal here. So, quite straightforward. It took a massive dip. Saw that it was creating a higher low at this point, and volumes came in. I joined the momentum and bought in at 8.5, sold at 9.0. A bit of scalpy action here from 8.8. Oh, sorry, 8.9 and 9.0, sold out at 9.1. So I got pretty scalpy here. Wasn't quite sure what I was seeing in the order book. And now we're going to take a look at what happened up here. And really it was just, I mean, I was playing with like maybe 20,000 shares or 15,000 shares or something. It was too close to the highs, and the volumes were getting reduced. So I wasn't too keen on holding a big position. Now, what I did do, mistakenly, was once I saw this candle, I should have let it go, right? Average volume for the day, considering the volumes here, it wasn't that significant, but it made a big impact. 9.3 to 8.7, big impact on small size. Shouldn't have scaled in, shouldn't have bought in at the VWAP. Just shouldn't. Just should have left it alone. Just say, fuck it, it's done. Let it go for a couple of hours and see if something else changes. But no, I was happy with the gains I made, so I went in, I sized in, and I actually ended up a red for this one, believe it or not. So even though I ended up like 2 or 3 ticks down, still because of the size that I put on, yeah, it was a mistake. I was in happy land. I made good coin on it to the upside. Decided to not necessarily double down, but just add on size to what should not have been added on to size. If I'm to look back in hindsight and go, why'd you do it? Don't fucking know. It was just a mistake, ultimately. Something I'll probably learn from. It was just, I was too fixated. And I'd argue this is where the emotional aspect of trading comes in. I thought I was doing really well, basically perfect trading up until this point. Everything was working well. I thought, okay, well, I forgot that perfectly. Guess what? This next one's going to be perfect. I'm going to do really well at the VWAP, and I totally ignored this candle, totally ignored the impact and significance of it, of selling down so much on such average volume, right? That wasn't a massive volume spike. If that was a massive volume spike, that's even better, right? Because it bounces off VWAP on high volume. Fuck yeah, that's good. Mid to low mid volumes and crashing through VWAP, yeah, that's fucking terrible. So in hindsight, yeah, that was a terrible trade and should not have taken it. I ended up red on AAU, and I really shouldn't have been. I'll be kicking myself for that one. We got MR1, and I'm kicking myself for this one as well. This was an accident. So I bought in at 3.1, scaled in at 3.0 as well at some point, and ended up hitting out by accident at 2.9. I had my sell ticket ready to close out at 2.9 because there was a big sell wall there. And my idea was if half that wall was going, then I would sell into it. I would join the momentum and sell into the wall. But what ended up happening is I was deleting files off my desktop. So I'm hitting Shift Delete. And then the prompt box of yes, would you like to delete or no? I'm hitting enter, and I think I must have double tapped enter. And that triggered the sell. That triggered my sell ticket. Now I had no idea. And when it executed, I kind of just froze. I was like, what the fuck just happened? So it's unfortunate because I hit the enter button quite a lot because I'm typing on Discord and stuff. I'm writing messages. And hitting the enter key, it didn't even cross my mind that would trigger the ticket because the ticket wasn't selected or anything like that. So frustrating. I guess just lesson learned there is just pay more attention to what I'm doing. Lesson learned, that won't happen again. So I guess what I want to point out to you guys, and this question has come up a couple of times, is when do I enter a stock? Now, don't consider this as financial advice, but there's two different ways to trade throughout the day. The first is the morning session. So if we bring up something like Z1P, that is following momentum. I have no problems doing that. All right, that's match trading. That's scalping the open. Follow momentum. You know, breaking horizontals here, the opening range, breaking through the opening candle, and then just shorting the shit out of it and riding the momentum. Or IGO, for example, which is one of that. I actually did trade for the match and just taking the momentum. Just add on, add on, add on, add on. Once the first half hour of the day is gone, everything changes about the stock. Everything. The way I trade completely changes. That liquidity, that fast trading, that fast decision making is gone. It's now waiting for chart setups, something like IDT. So waiting for something to present a chart setup for me to buy into or short into. Something like AAU, for example, you know, once that action's done at 11 o'clock, this one had a little more of liquidity than usual, right? Most stocks die off at about 10:30. So this one actually went for a little while longer, up to 11 o'clock. And then from this point, it's about waiting. Let me just delete that. So it's about waiting for me and seeing if this will, you know, maybe hit VWAP, maybe come back up and maybe start swinging back to the upside and maybe retesting this 9.8 level. And then if the volumes come in, then join the momentum either right beforehand or as it's happening and joining the volume. So that's how I trade afternoons, is I wait for a setup, and in this case, FME, quite straightforward. Volumes came in, swing into the upside, and if we go here, you can see that I never buy the bottom. Right? I don't buy the dip. I think that's terrible. Anyone that does that, I think, is just constantly going to lose money. Because at what point do you stop buying? Right? There's no rhyme or reason to enter here, 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 or here at any point in this pullback. It's like, why? What's your risk management plan behind entering, let's say, 20 cents here? Let's say if we bring it forward, make it look like real time. Why would you buy here? Or here? Or here? Nothing, there's no real justification for entering this stock. At least none that I can see. Maybe there's something on the daily chart. But what have we got here? 21.5. All of a sudden, we're seeing a new high being formed, right? It's no longer in a downswing. It's now, for the first time, going to the upside. But we still haven't got volumes. No volumes, no volumes. Oh, okay, maybe they're starting to creep up, and boom, what have we got? We got a 220 now with a pretty sizable volume candle. Okay, something might actually happen here. That would be the first indication of an entry. We're starting to rise and retest this 23 cent high. And all of a sudden, more volumes come in. Yeah, fuck yeah, I'm buying that every day of the week. I'm following the volume and anticipating the breakout. So if this horizontal breaks out, it's going to pop the vast majority of the times. Yes, there's a chance that this will sell off on high volumes. But then it's just close out the position, take break even, or take a one tick loss. Like that's the method of trading that I do. In hindsight, it looks easy to do. Let's say we bring up SUD. Again, another example of, hey, we're suddenly making a new high, and it's subtle. It is subtle, and the news was interesting as well, some sort of COVID-related news. We're swinging, we've tapered off, and look at this. We've suddenly got some volumes coming in, pushing this from 4.8 to 5.0, and then even bigger volumes pushing it to 5.1, 5.2. All of a sudden, we're hitting VWAP, and that's fine. It's very difficult in this situation to buy before VWAP with some security, right? It's difficult, and I was talking about this in Discord as well. Like, you can buy at VWAP, but there was no real opportunity to buy before VWAP at 4.9, 5.0, 5.1. Maybe 5.1 if you got lucky on this volume here, if you got lucky and caught it. But it's already at VWAP. It's already at VWAP with volumes that pushed it there. So the decision making is to get it as cheap as I can, which in this case was 5.2, which is sort of, dare I say, a retest of this shitty horizontal. But basically it's a new high, retest, and it's all on the back of volume, right? It's all quite subtle. So That's the risk I take, is like 5.2. Okay, if 5.1 gets wiped or starts getting taken, then I have no choice but to take my 5.2 and sell out at 5.1. It is what it is. I'm trying to follow volume, but ultimately, this ended up being a swing to the upside on the back of volume. And then again, volume's pushed it beyond VWAP, and then the lack of volume is what caused me to sell at 5.5. It was the reload, wipe, and it looked like one big order that was just repeatedly selling into 5.5 every time an order came up. So that's my style of trading. I don't pick the lows. I don't buy the bottoms. I don't, especially on something that's downtrending like this. Maybe you could argue there's a horizontal here, the opening range, possibly, but without volume confirmation, there could be a high volume dump. I prefer buying into high volume rise or shorting a high volume dump. It's one of the two. I want to follow momentum and key levels. And of course, if this kept trending to the upside, then this would have been a key level as well. And then possibly scaling into the position. So if this volume ended up pushing it to the upside and more volumes came in, I would have added onto the position and waited to see what happened at the breakout. Or is there going to be a high volume resistance and repeat selling, like hidden icebergs at 6 cents, and I would have sold out at 5.9 and then waited for a pullback and then waited until it swung back up to the upside again. So you guys get the idea behind the swing trading, right? This is swing trading. This isn't scalping. So after 11 o'clock typically, so this is my scalping time. This is my identifying chart patterns and setups and following momentum and volume when it comes. So I hope that clarifies for some people, maybe give them an idea of a particular trading style. So that's just what I do. So if you learned anything or you found it useful at all, please do consider hitting that sub button. I'd appreciate that a lot. Cheers, guys. Otherwise, I'll catch you next time. Peace.